have a good weekend. Jigar Mistry is with us, co-founder of Buoyant Capital. Jigar, thanks for waiting. Appreciate you joining in on short notice. Let's just start with your thoughts on what we're seeing, which is, absolutely spectacular price action for not large caps, but just below large caps, right? I mean, mid and small and micro, smaller the better. And you and your fund, which has done well over since inception, you guys have done very well. You guys are turning cautious. You are bottom-up stock pickers. Look at largely opportunities from mid caps and small caps as well. Looking at stocks that you've owned in the past, but now you're moving into large caps. Tell us why.
Hi Prashant, good afternoon. Thank you for inviting me as always to your show. But see, come to think of this, right? India is in a superlative place over the next 10 years or so. But look at what's really happening in the run-up to that long term. Any sort of news is being taken as a positive news, right? So you have promoters selling, they've sold, I think, 2x in 6 months versus the 3 years average for full years. So that's taken as a positive, or a lot more float coming in. You have, large P's selling out a tech business. The stock ended 10% that day up. Again, more float, overhang gone away. Good results are obviously good news, but bad results are also taken as good news. Contract wins are essentially leading to stocks getting re-rated. And people have started discounting F26, F27, 28. So I think all put together, we are of this opinion that, yes, in the longer term, it does make a lot of sense. But in the run up to it, you might have a scenario where you could, take a pause before the things become a lot more clearer. Effectively, building off a 5.5 US Fed fund target rate. And then, you try discounting it back to an Indian corporate discounting rate, and rates could stay higher for longer. You try putting that in your DCF models, you will find a very different picture. From there, you get to India-specific issues. Crude has rallied to almost 90. That's a $17 run-up, effectively $35 billion in annual payout higher. Secondly, you also see this scenario where the Fed fund target rate and the repo differential is now only at 100 basis points, which is the lowest it has ever been. And $274 billion worth of short-term liabilities will get, fructified. So that needs to be taken into account. Rainfall has not been ideal. So at least the eastern part and the southern part, you are seeing a 16 and 17% sort of deficit flow through. Kharif season sowing is happening, so that's very important. So I think all of these, yes, it's a great story in the long term, etc. But one needs to be a little more cautious, especially the way in which you are seeing the actions in small and mid cap. So we have, as you mentioned, we have always run it as a flexi cap fund. There were times when we are predominantly large caps, times when we are small caps, and we are turning into large caps as we speak.
By the way, some big news which can boost India's AI revolution. Reliance and Nvidia are partnering to advance AI in India for India. If you remember, even in the Reliance AGM, Mukesh Ambani spoke a lot about AI. And I remember he said that 7 years ago, we had promised telecom, broadband connectivity to everyone. We have delivered. And now our promise is to give AI to everyone, for everyone, and we will deliver. He spent a lot of time talking about AI, and this appears to be one big step that Reliance Industries is doing to build that digital infrastructure.
Rima, I just want to comment on the press release on the specifics on what this alliance entails. I mean, what we have right now is this press release from Nvidia. What the company is saying, and this is a joint press release, I mean, obviously they're mentioning Reliance in it, the companies will work together to build AI infrastructure that is over an order of magnitude more powerful than the fastest supercomputer in India today. Nvidia will provide access to the most advanced Nvidia GH200 Grace Hopper superchip. So basically, Nvidia gives access to this superchip and this technology to Reliance. What does Reliance do with it? It goes on to say that to serve India's vast potential in AI, Reliance will create AI applications and services for their 450 million Jio customers and provide energy-efficient AI infrastructure to scientists, developers, and startups across India. So two-part, Reliance uses some of this technology for its own customers, its data and telecom customers, and it also provides energy-efficient AI infrastructure. Remember, I mean, Reliance has its own huge plans in new energy to support the supercomputing architecture and infrastructure that is being set up across the country. So this is pretty phenomenal. And of course, Prashant, being our resident NVIDIA expert, someone who loves to read more about the company and the absolute phenomenal moves that it has made, the moves that the stock has made. By the way, the stock is finally reacting as well. I mean, it's not an alliance to immediately set up this, super chip by Reliance just yet, but it's an alliance to partner and move forward, taking AI in all its formats. I mean, in telecom and in data, in new energy, and in so many other verticals. I think this is being read really positively by the market.
And there's great demand for NVIDIA chips, and that's why NVIDIA is...
wants to be in this country.
$1 trillion market cap, Surabhi. Trillion with a T. And so this is interesting the way.
So ChatGPT is a large language model, right? Bard is a large language model. So what the press release says is that they want to develop India's own foundational large language model based on our regional languages, the diverse languages. So I think, by doing that, they're trying to use all India's, regional data so that you can cater to everyone.
The reason you need NVIDIA chips to do this is because they are high processing.
They can process it, they can compute it.
They were largely developed for gaming and now a very high processing power. I actually, when I first saw it, I thought it's like for a chip design and stuff. That would have been...
Exactly, that would have been absolutely phenomenal.
This is, I guess, a start, and that's what's coming through. 0.75% higher Reliance. I mean, not that the market needed any help, but it's a bit of a push coming through on from Reliance as well. 19,800 is what we have now.
Okay, Jigar has been waiting by. Jigar, wanted to get your thoughts in on one stock that you've consistently been holding in the IT pack, and that's Cyient. Now, Cyient has done very, very well. Year to date, Cyient has given you a rally of 120%. Yet, despite that, it's still much cheaper than peers like an L&T Technology, a KPIT, Tata Elxsi, which largely operate in that whole ER&D basket. The question is, do you see more upside in Cyient from here on? Are the valuations okay still? How do you view Cyient after the kind of rally that we've already seen?
Right. So I think, it is still an interesting business model. And when we bought it, I think it was at the peak of the COVID scare. That's when we actually increased the position a lot more there. And since then, I think that new sort of things have kept on emerging. So whereas the large IT packs have seen some amount of demand pressure come through, here you have had the DM, LLM sort of the subsidiary get carved out of the main business, and then that got separately listed. And then the key businesses, if you hear the management commentary, has continued to remain a lot more positive vis-a-vis everybody else. And there has been earnings upgrades as well. So as you speak, you have a scenario where the valuations are, I think, 22 times, 23 times F25, and then going forward much lower. I think it continues to remain an interesting business model. Viral tracks it from our team. But we continue to own that as we speak.
Okay, that's a word on some of the IT names. Jigar, hi, good afternoon. I think this market has been trying to wrap its head around this massive PSU rally that's played out, right? Anything that has the government of India as a shareholder just touches stratospheres. What have you made of this trend? What is the caution, if any, that you'd like to put on the table? And which of the stories that are perhaps still good for more? And then we need to be prepared for that.
Hi, Surabhi. Yes, so I think you have the PM sort of green lighting the whole rally, then you do come to expect a little more out of it. But I think this entire market since, since I think I can remember, it has always operated on narratives. And then narrative keeps playing out. When it starts, it's reasonably attractive. So you look at the 14 to 19 consumer rally, or you look at the 2000 to 2008 rally there. You ascend the power sector rally. It starts with, something being very compelling till the time the entire street buys in, and then it goes towards something which becomes unsustainable at the end. A lot of sort of PSU businesses, given the orders that they are getting, the railway capex, the sort of entire ecosystem around railway capex, that's done fairly well. The banking system, I think overall, PSU or otherwise, is still a very interesting lot to sort of keep looking at it. And I think there eventually will come a time when it becomes a lot more unsustainable. But right now, a lot of businesses, especially in the financial space, are very interesting to look at.
Rapid fire, Jigar. Have you looked at PFC, REC?
No, we don't have it, Prashant, sorry.
Okay. You like MFIs, right, within the financial spec?
Yes. So MFIs are interesting because there's a cycle over a cycle. So financials itself is a cycle. Within that, MFIs are a lot more constricted cycles. So that timing is still reasonably decent. So that's a space we are interested in, yes.
Okay. Now, mid-cap IT, we kind of briefly touched upon with Cyient there. You own hotel names, Jigar?
Not in a big way, Prashant. So that's an interesting theme, and okay. ARRs will keep rising. The smaller, the better, basically. We have some exposure there, but not very meaningful.
So if you had to rank the preference right now in terms of sectors, subsectors, just list them out, the top 3 or 4 areas, pockets.
So financials are very interesting. Pharma generics are very interesting. Cement is one sector that we are very happy with. Hotels is interesting. And I think let's not forget cash also increasingly gets very interesting by the day.
Okay, all right, Jigar, thanks so much for stopping by and giving us your view on a whole host of stocks as well as sectors. Wishing you a good Friday evening ahead. But the markets, well, they're parting. They're already up.